All right. Good morning, everybody. We're on the other side of the week, so we're on the downhill slope. Markets are not any better positioned than we were at the start of the week. We're going to get some jobs data today. Any jobs data in this environment is going to be important, right? It's part of the Fed's dual mandate. We can see U.S. markets on the bottom side here, all in the red, down at least 0.25% in each. Euro at a quarter, UK close to flat, Hong Kong slightly in the green. Compared to what we've seen lately, this up a quarter, down a quarter really doesn't amount to much of anything. Unless we get a big outlier number on the jobs this morning, I don't think this data that we're going to get today has much punch. A little bit of auction in the front end, the 4-week. A little bit of government talk out of Europe and ECB lane. Then we've got Bank of England. Thought there was another one. Yeah, later tonight, Kashkari. Right, we got Google tonight. So part of that surge yesterday was attached to the idea that Trump was walking back some of the tariff talk, and then the reaction from the overnight into this morning was based, or at least being attributed to China's response, which was basically, we have nothing to talk about because you haven't backed off the tariffs. You've only talked about backing off the tariffs. We're starting to get all of our options levels grouped together. Remember, like a week ago, they were spread out with the call wall really close to like 6,000 level, right? Everything was just really wide. And even after OPEX, we still didn't get much of a change in those options structure. Now, without even zooming out anywhere, we've got all 4 of the options levels in sight. Right now, sure, we've had some pretty big moves. We got 48 on the downside here and 55 on the upside. So it's a lot of range. But our options levels are all tucked in there together. And we've been looking for more and more signals that this was that the low was in. So I guess that's just the easiest way to say it, that the low is in. And there's still a lot of argument for why we think maybe the low is not in, that we could come back down, break that low, and go even lower. At this point, I think it would take something really bad, right? Some shock and awe, something we didn't see coming. And throughout history, some of the biggest events that we've had in the market didn't come from the known things that we were worried about, right? Those bricks in the wall of worry. Usually it's something out of left field, nobody's seen coming, scared the market, shocked them because it was a surprise, and then we had some big move. So I'm inclined to look at 4,800 as the line in the sand and say, the low is in, unless something something goes terribly wrong, or we get some shock and awe that we can't anticipate at this point. Just because the low is in does not mean I think we're going to rally back up and that everything is going to be fine again. There's been a lot of damage done to the markets, and you won't fix that right away. For the moment, having these options levels all brought down together like this, I want to see what Spot Gamma has to say and if they really address this at all. But we've got our surge price above the 3 and the 10. We got the 3 above the 10 now, just barely this morning. That's that white line here above the blue one. We need to keep that, stay above the 10, and we can wick down below it. We could even, get a close below it as long as within the next day we get back above it. We need to maintain that above the 10, and then, of course, continue to set higher highs if we're going to continue to run this back up. And the next stopping point, once we get past the 20, would be the 50, the orange line up there, 56.17. It'll take time to get there, and that means the 50 will continue to fall. So maybe by the time we actually get to the 50, it's lower, somewhere around 55.70 or 55.80, right? It's going to continue to fade, but that would still be our next stopping point, is that 50-period moving average. But like we've talked about before, if we're just using candles and we just want to keep it simple, we need a higher high, right? We got a low, we got a higher low. We need a higher high. We need to break this. And it needs to be more than just a little wick up, right? Some little Pinocchio candle or some candle that looks like this. It needs to be more than that. We need just a good, honest, solid close above there, decent candle. Then we've got to set another higher low. So, we don't need to use indicators. We can just use price action. There's a lot of work to be done. For today, so far this morning, we are pinched between the 20-period daily moving average and the 10-period daily moving average. That's the two levels that we're working on. Now, we can stay inside these levels all day. There's nothing that says we have to get out of it. And they're not set in stone. We can see yesterday, even though we were fighting against the 20, we made it through there and expanded beyond it nicely. Just want to focus on where we're at today. Pinched between those two moving averages. If we stay inside it all day today, this is going to build up a really nice compression level. It's just like a coiled spring ready to pop. Overnight volume still showing elevation. Remember the old days when we had 40 to 60,000 in the overnight? Now we're looking at 131. And we're averaging more in the hundreds. Just the way we're at now. That's our new norm. We already hit yesterday's 111. That's what it's called, even though, sometimes we hit the 123. If you was to measure all of yesterday, you can do it two ways. You can measure all of yesterday's RTH, or you can measure all of yesterday, including this low, right? Literally everything of yesterday. If we measure the RTH and we put the 111 on there and the 123, people have seen my posts. You know what this is. I show it all the time. It's a really good trade opportunity. Now, I wasn't awake at 3:30 in the morning to trade this thing. Usually this setup for me is more profitable when it happens a little later in the day, right? Somewhere around 435 would be great, 536, or even in the intraday is fine. But that is the play. And we went back up just like we're supposed to. Even had a nice V shape, just like we're supposed to. It's just a really good example of the follow through of that trade. But it stalled out now. We didn't come back in and get above 786. So that's now the concern, right? We got to get above the 786. Basically 5411 cog line to get through that so that we can get back to the 50% of yesterday. And the concern is that we're going to come back down here. It's Tuesday's close. We can do that and still not be to the average daily range. This red line down here is 5,300. And I got this sneaky little suspicion that we're going to go down there and close that gap. So keep your eye on the 786. If we can't get above this, then I'd look to break our own Globex low and then get this gap closed. Simple enough. While technically it's possible to say this, we can't stay here, right? We can't. It's possible that we could, right? Price can do whatever the heck it wants, but that's a really tight range. And I don't see us staying in a 50-point range for the second half of today's trading, right? The day is half done. I don't think we're going to stay here. $53, $58, the weekly expected move, the weekly floor pivot. We tested it, it held. I'm surprised, but I don't think it's going to hold up again. The channel actually provided a really good opportunity if anybody was trading it in the overnight. They say when we're still above the weekly pivot, we're bullish. But obviously that has to be taken into context because when we were falling off of that high, that wasn't very bullish, right? We've been working our way back down to that floor pivot. None of that was very bullish. So those generic off the cuff comments that you read in these profile books where they say, you know, we're bullish above and bearish below. Sure. Until price is falling, then it doesn't match that thesis. If that's confusing, the idea would be you should be looking for longs. And of course, if we were falling the whole time, you didn't get any long setups. So it would cancel itself out. Today's floor pivot is higher than yesterday's floor pivot. That's bullish. Price opened underneath it. That's bearish. Those two kind of cancel each other out. Today's channel is narrower than yesterday's, but it's still not as narrow as it could be. Here's an example of how narrow it could be. It can get so narrow that you don't even see a channel. You just see a line. It's not that narrow, but it is more narrow. And we haven't hit it yet. 80% of the time, a market is going to hit its pivot point. We have an MDP from yesterday. That's a missed daily pivot. Yesterday's pivot is all the way down here. We never got close to it. And so it formed yesterday. It counts today. We have one today so far, and it would count for tomorrow. The odd thing is we were above on the MDP yesterday, and we're below it today. And I know I've got some examples of that I saved when I was learning these channels and the way we can use them in analysis, but it's not common to have that back-to-back missed daily pivots where we were above it on one and below it on the other. So I'll have to go back and check my notes and see what that implies, but surely it can't be anything good. If we can break this weekly pivot, which is basically our own Globex low, then we're still on target for Tuesday's close. That doesn't change, right? The only thing that changes from this one to what we were looking at a minute ago with the ADRs is that it's not just our own Globex low now, right? It's also the weekly pivot. It's also the 1, 2, 3, 6 from yesterday's inside measured range. So this low is a very strong low. It's got multiple levels of support to it. The shallow area should have fell through there relatively quick. Of course, it's shallow because we closed here and we opened here, right? That left this shallow zone. Generally speaking, we tend to move through shallow zones fast, right? Because there's not much of a footprint behind. Once we get the gap closed, it looks like 5,300 has some structure there that we could get tied up on. Might slow us down a little bit. Ten-day, 30-minute volume profile with TPO. The TPO's point of control is out of alignment with the volume profile's point of control, but not by much. It's interesting that one is on the gap that we need to close, that Tuesday close, and the other one is basically where we're at right now, this morning. It's really close to it anyways. So we got some structure getting built out there, that 53.92 cog line. It's basically where we opened on the gap up Tuesday night. So we're building out this level. We can see the active attempts to try to fix this. If this point of control is going to move, it's very likely going to match the TPO's point of control, and it's going to go up there, right? That would be a likely assumption. That would put it over our head if we do fall down and get the gap closed, and then we have the point of control behind us or above us. No new VPOC from yesterday. We've already crossed through that zone. And that 53.16 VPOC that we have down here, it's the close from Tuesday. So we're getting a lot of data from a lot of different sources that's matching this gap up where we opened or the close, which we have to go back to, and or the Globex low that we've already set. Those three data points just keep coming up again and again and again in everything that we're looking at. Symmetry. Not much in the profile this morning, just a more classic D shape than anything else. As we were talking about, we're back above the 10. We're trapped between the 10 and the 20. There's a bit of a range around the 10, about 0.5% above and below. It's this mild zone where we can just cross back and forth above and below the 10 until we finally escape it and move it. Now, sometimes I've called that a gravity, that we kind of get drawn in there and like gravity, and then we struggle to get out of it. But it's more than that. If you watch the options on an intraday trade, when we get into that zone, if we didn't start the day there, let me preface by saying that. And watch how the market's options say in the SPY, the Qs, or SPX, when we get into the 10, like a safety zone. The hedging is altered. Then we wind up and wind up and wind up, and we finally leave that zone again. It's very much like a cog line, only it's a dynamic one because it's, it's the 10, it's constantly moving. The cog lines never move. There's no real better way to explain it than to say that the options trading very much resembles the way cog lines respond when we get around that 10. So it is a unique level. But it wears off at some point, right? If we continue to hover there, holding and holding and holding, say like we did back here, especially in that zone, that at some point it just isn't as effective, or it winds up and winds up and winds up, and then finally we get a move. Now, in this case, the move was to the downside. That's where we were doing all the winding up, and that's where we finally broke down or got spit out. So once we get there, we can really hold the line for a while. You can consider it a correction in time rather than a correction in price. It's a place to heal, give the markets a time to get cleaned up, digest moves that were, a bit outsized. We are still within the week's range. Came back in after getting outside of it yesterday. While we should close inside this range 70% of the time, we're in the market environment where we are not closing it inside even 30% of the time, 40%. So I wouldn't put much weight into the idea that we're going to close inside that box. We're still basically 3% below the 10-week. We are on the way back, though. Once we get underneath the 2% level, it should go a bit smoother, maybe even a little swifter. We could move back towards it in an expedited fashion. Kind of get an idea of that looking back at previous times, right? We can go from being negative significantly to being positive in a single shot, right? It doesn't take much on some of these leaps where you could just cross over really fast. So we had a deep dive. We brought that back in quite a bit. We can come back up fast from here once we get below that -2, right? Or inside that -2, I guess the better way to say it. Had an outlier yesterday. Gold and gold miners were down and silver was up. Something we were looking at yesterday afternoon. The silver miners were kind of flat, and gold wasn't just up, or silver wasn't just up. Like it was up well, all right. It's a nice pop. So generally in that kind of situation, you try to figure out, well, which one's the liar? Is gold gonna turn around and play catch up with silver, or is silver gonna drop and play catch up with the gold? I didn't have an answer to that, by the way. I was just throwing it out there. It was an oddity. I want to keep an eye on that. May find an opportunity to make some money off of it. This morning, Bitcoin is down. The China group is down, and financials. We're really close to seeing consumer discretionary down as well. It's on the line. It's really close. And that oftentimes is a reflection of the Mag 7 group. Not perfect, right? It was close. So that's not what we want to see for sure. The growth versus value rotation. Really didn't work out that good. Let's see this a little differently. All right. So on the left here, IWF, IWD, it's classic growth versus value, where it really reflects opportunities to trade the Mag 7. If we popped back above the 2.0, it'd be a good opportunity to, try to find some long options in the Mag 7 place. Apple, Amazon, Google, blah, 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 right? You wouldn't blanket buy options on all of them, but you'd want to evaluate which of those would be good long plays. Because this thing is just fantastic for that, right? And it's growth versus value. But it's not a really good representation of growth versus value. This one on the right is also growth versus value. It's a better representation of the growth versus value dynamic. And it's not so narrowly focused on the Mag 7 either. So we can see this push, which kind of lines up, with that recovery off the lows in the S&P. We had growth coming back, value taking a back seat. Just keep in mind when you're talking about growth versus value, it's not that one has to go down and the other one goes up. It's just that one is likely outperforming the other. So they can both go up. Or if we're going down, they can both go down. Just which one is outperforming. Value is outperforming is why we popped up as high as we did. All right, growth, excuse me. Growth was outperforming is why we popped up as much as we did. And then that started to fade out once we got back, right? We fought this previous level. It doesn't look like we're holding it. We're starting to fade. But so far, if I was to throw my lines on there, that's like a 786 pullback, right? It's healthy. It's good to pull back. We're starting to get a little bit of a turn up, and we got a matching turn up here. And when both of these are moving in the same direction at the same time, I tend to like it a little better. Because then we got growth versus value in a much broader representation, right? We got it in the Mag 7, and yeah, we got it in the rest of the market too. So this is it's a good start. When we look at what's up this morning versus what's down, bonds, chips, and gold miners. And really, we just have the miners. We don't even have the gold, just the miners. You don't want to rally sustained on pot stocks, miners. I'm surprised we don't have some solar in there somewhere. I'm sure we do, and I'm probably just overlooking it. Those aren't the sectors you want for a rally, right? We want Mag 7, maybe some help out of the treasuries. So here's gold. We do have gold and gold miners up. It just wasn't showing on Thinkorswim. Crude up this morning too. It's getting closer to that 70 level. Now this is USO and not CL, but still crude turning things around. 70's been the target, right? By end of month. That's a pretty bold call to not only give the target but the time frame too. Especially when it was called out and we were still, what, 54 or 58. It was right around that area. 70 is the line in the sand. It's not my call. Let me make sure I say that clearly. I didn't say we're going to 70. But so far, we're working our way in the right direction. Clock is ticking. We're running out of time. QRA is coming. It's a two-part event. Starts next week, Monday and Wednesday. And it's impactful, to say the least. So junk, crude, energy, chips, miners, pot stocks. You know, it's diverse. It's spread out nice, and it's not really extreme, other than the pot stocks are getting a little extreme. So it's a good start, but it's not what we need, right? We need to get tech, finance, consumer discretionary, and we need it with some size, and this ain't it. So the sideways day, or even dropping off and getting that gap closed, is looking really good at this point. That can change on headlines. Obviously, we can always change due to headlines. Because if you look at the negative, it's not that much, right? Finances are down 0.5%. We'd want those to come back up, and Bitcoin less than 1%. And for Bitcoin, that's nothing. So if we can get those two to at least stop falling, that help. And then we need the rest to do, like tech is flat. We need it to run. Not a surprise when I say watch the headlines today, because what else are we gonna do, right? Got to get this gap closed, and it's very likely that that's what we're going to work on. We don't have to. I got to keep reminding and saying this. We don't have to go down there and close that gap. We can stay trapped between the 20 and the 10 right there. We can do that all day. And if we break that high, which is basically where the 20 is, we can go up to yesterday's high. And that would still give us the low that we have this morning and yesterday's high. We can do that all day today. We don't have to close this gap. But either way it goes, no matter which one of those we do, we have to GTFO, get out of this box. That's the start. If we break out above the box, you got to target it yesterday's high. If we break out the box, you got to target it's this gap close. Whichever way you go, that's not bad. It's about 50 points in either direction. Really nice setup. Right. I'll take it. It's better than nothing. Everybody, be careful, be safe, have a good day. Keep your eye on the clock.